Have you ever looked at a high-end neighborhood or a luxury car and thought, that's what wealth looks like? We've been conditioned to believe that wealth is loud, that it's something you can see, touch, and measure by the size of a mortgage. But after a certain point in your investing journey, you realize the exact opposite is true. Real wealth is actually incredibly quiet. There is a moment in every successful investor's life that feels almost unreal. It's a moment of silence where the constant grinding noise of working for money finally begins to fade away. We call this the crossover point. It's the exact mathematical threshold where your money officially starts working harder than you do. If you're currently in the grind phase, saving every dollar, cutting back on expenses, and wondering if that $500 monthly contribution is even moving the needle, it can feel like you're pushing a massive boulder up a never-ending hill. But for those who stay the course, the boulder eventually reaches the peak. And once it starts rolling down the other side, the signs of your success don't show up in your driveway or on your wrist. They show up in your psychology. Today, we aren't talking about the spreadsheets or the math we covered in our last video. We're talking about the 5 subtle, quiet signs that you have already reached the crossover point. Signs that your portfolio has taken the lead and changed your relationship with time forever. Before we uncover the first sign, which is the one most people completely miss, make sure to hit the subscribe button. We're building a community of investors who prefer a calm, confident financial plan over a loud, flashy one. Sign 1. The psychological decoupling of the market. The first sign you've reached the crossover point is a shift in how you feel when the market breathes. When you first start investing, every red day on the charts feels personal. If you have $5,000 saved and the market drops 2%, you feel that $100 loss in your gut because it represents hours of your actual labor. You think in terms of work hours lost. But as you cross into this new territory, a strange psychological decoupling occurs. Suddenly, you've reached a mass where a typical 1% or 2% market fluctuation represents more money than your entire monthly paycheck. Logically, this should be terrifying. You are losing a month's salary in a single afternoon. But instead of panic, you feel a weird sense of calm. You've stopped viewing market volatility as a threat to your current life and started viewing it as the natural weather of a long-term climate. Think of it like a massive ship in deep water. When you were in a rowboat, every small wave rocked the vessel and threatened to tip you over. You had to focus intensely on every ripple just to stay afloat. But now, your portfolio is a massive tanker. The waves are actually much larger now than they were before. A 5% drop on a $500,000 portfolio is a staggering $25,000. But the ship is so heavy that you don't even feel the vibration in the cabin. You stop checking the balance every morning because you've realized that the daily noise no longer has the power to change your reality. Your wealth has become quiet because it's finally decoupled from your emotions. Sign 2. The contribution indifference. The second sign that the math has flipped in your favor is a feeling we call contribution indifference. When you are in the early stages of building your wealth, you are the primary engine. You likely remember a time when you fretted over whether you could contribute $400 or $500 to your account this month. You cared because, back then, that extra $100 was the growth. Without your manual deposits, the balance stayed flat. At that stage, your savings rate is the only thing that matters. But as you reach the crossover point, you start to notice something strange. You realize that whether you make your contribution this month or not, the breathing of the market moves the needle far more than your paycheck ever could. Let's look at the math. If you have $500,000 invested, a very normal 1% move in the market changes your net worth by $5,000 in a single day. If you are still working hard to deposit $2,000 a month, you start to see that your manual effort is being dwarfed by the sheer mass of the portfolio. Your relationship with your bank account changes. You still contribute, of course, but it's no longer with a sense of desperation. Your savings have shifted from being the engine to being the oil. The oil helps the machine run a little smoother and reach the destination a little faster, but it is no longer the reason the car is moving. When you stop obsessing over the exact dollar amount of your monthly deposit because you know your portfolio is doing the heavy lifting, That is the sound of wealth becoming quiet. Sign 3. The work for interest, not principle shift. The third sign is a fundamental shift in why you show up to your job every morning. We call this moving from working for principle to working for interest. In the early years, your job is a rescue mission. You are working to save the principle, the core foundation of your future wealth. You are a prisoner to that paycheck because if the income stops, the building of your foundation stops too. This creates a high-stakes environment where the toxic workplace trap is at its most dangerous. You tolerate the stress, the micromanagement, and the long hours because you feel you have no other choice. But as you reach the crossover point, your relationship with your employer undergoes a quiet transformation. You start to look at your paycheck as a way to fund your current lifestyle, the groceries, the travel, and the hobbies, while knowing that your future is already bought and paid for by the compounding machine. This creates a new level of professional courage. You might find yourself speaking up more in meetings or negotiating harder for the time off you've actually earned. Why? Because the deep-seated fear of being fired is replaced by the quiet security of the portfolio. You are no longer desperate for the next dollar to build your base. The base is already there, working silently in the background. When you realize that you are working because you choose to, and not because you are a requirement of the machine, you have officially reached a level of freedom that most people will never understand. You are finally working for the interest of life, while your principle stays safe and grows without you. Sign 4. You've stopped optimizing for pennies. The fourth sign that your wealth has become quiet is a shift in your mental energy. You have moved from micro-frugality to macro-management. When you are first starting out, every dollar is a seed that needs to be planted. You track every expense like a hawk, because in the early days, a $5 latte or a $10 streaming subscription feels like it is stealing from your future. You are checking the oil level of your finances every single day just to make sure the car can stay on the road. This is a necessary phase, but it is a loud and stressful one. However, as you reach the crossover point, your perspective widens. You stop stressing over the pennies because you are now managing a machine that produces dollars while you sleep. When your portfolio grows by $2,000 on a random Tuesday just because the market went up, the idea of agonizing over a $5 coffee becomes mathematically absurd. You've stopped looking at the small dials and started focusing on the big three: your housing costs, your transportation, and your tax efficiency. You realize that wealth has actually made your life simpler, not more complex. You no longer feel the need to optimize every tiny transaction because you know the heavy lifting is being handled by the mass of your investments. This is the ultimate sign of financial maturity. You aren't being reckless. You are simply acknowledging that your time and mental energy are now more valuable than the spare change you used to chase. Your wealth is quiet because it no longer requires you to micromanage its existence. Sign 5. The boredom of success. The fifth and final sign is perhaps the most counterintuitive of all. It is the realization that your path to wealth has become incredibly boring. We are constantly told by the media and social platforms that building wealth should be fast, exciting, and full of high-stakes decisions. But as you reach the crossover point, you discover a different reality. You have stopped looking for the next big thing, the hidden gem stock, or the latest crypto trend. You are no longer checking the financial news every hour to see what to buy or sell. Instead, you have found contentment in boring, low-cost index funds because you have seen the quiet math of compounding actually work in your favor. This boredom is actually a sign of ultimate victory. It means you have successfully built a self-sustaining machine that no longer needs your constant attention to grow. You have traded the dopamine hit of a lucky trade for the deep security of a proven system. At this stage, you realize that the most valuable thing your money has bought isn't more stuff or a status symbol to show the neighbors. It has bought you the fact that you simply don't have to think about money anymore. Your mind is free to focus on things that actually matter: your health, your family, and your passions. When the excitement of the chase is replaced by the calm of a finished foundation, you have reached the peak. You aren't just wealthy on paper, you are wealthy in time. You don't need a $10 million net worth to feel the power of quiet wealth. Most investors begin to notice these signs once they hit that $300,000 to $500,000 range, the exact point where the math officially flips. If you aren't there yet, don't be discouraged by the slow start. The hardest part of wealth building is the first few inches of movement. Right now, you are doing the invisible foundation work that sets the stage for everything else. It is a heavy lift today, but the freedom waiting at the top of the hill is worth the climb. The reality is, the bar to be above average is surprisingly low. Most people quit before compounding has a chance to do the heavy lifting. By staying consistent, you are already doing what 97% of the population won't. If you've noticed any of these signs in your own life, even in a small way, drop a comment below. Let us know you're on the path. Stay the course. Your tipping point is coming.